Welcome back. That bumpy ride for Snapchat follows its highly anticipated IPO is not stopping investors from wanting a piece of the big public debut for the next big thing. Renaissance Capital's ETF ticker IPO balances the excitement of investing in IPOs with stability of reducing the exposure to the volatility of newly public companies. Joining us now is Renaissance Capital Principal Kathleen Smith. Kathleen, good to see you. Thanks so much for joining us.
Thank you.
First off, let's talk about what happened with Snap. What do you think went wrong?
Actually, the Snap trading had a lot of enthusiasm, and we would say that it's kind of gone right in the sense that it puts a fear in investors' minds about chasing stocks like that to levels that may not be supportable. So there's a little bit of, we think, positive price discovery with the Snap IPO right now. It's up only 15% from its IPO price. There was no reason to run after that stock when it went public.
How are IPOs doing in general? How would you characterize market?
The IPO market, there are two sides to the market, returns and then issuance. The returns were very, very strong year over year. The index that our ETF manages was up 22% year over year. Those returns then put the enthusiasm into the market for investors to come in, and issuance started to pick up. So we went from the doldrums of 2016, the worst issuance activity since the financial crisis, to a much better environment now. So issuers are starting to open up, and I think we're going to see more IPOs, and we'd like to see them not run up to the sky. Trees don't grow forever. Snap's a good example of that.
Well, the lead-in said that you guys manage the expectations through the ETF vehicle that you have. So basically, how do you do that? Do you own Snap? If you do, why? If you don't, why?
The way the ETF works is it tracks an index, which is a basket of about 50 of the largest, most liquid IPOs. And what that does is it moderates the risk of single stock ownership. In the case of what the ETF owns currently, Snap was included in the ETF at Friday's close, so it's now one of the top 5 constituents because it was one of the largest, most liquid IPOs, the biggest IPO so far this year. The benefit of it is that all the major indices do not own these names. So if you want to invest and really own the overall stock market, you can have the S&P, but also know that there's a vehicle where you can have many of these other names that will take several years to be included in those. For example, Facebook took 2 years to be included in the S&P 500. That's the benefit of the product.
So the story in the Wall Street Journal that we mentioned earlier that small cap stocks have been underperforming this year, up about 2.5%, less than the broader market after a double-digit gain between Election Day and the end of the year. Does that bode ill for IPOs?
Yeah, IPOs do consist of many small and mid-cap companies, so that is going to be an issue. The benefit, however, and I think the reason we've seen the big rally is there's an expectation that corporate taxes will be lowered, and if so, that really hits at the heart of the small mid-cap companies. So I think we saw a special run-up in expectation of that. Now it's, will we get that? And and those companies stand to benefit. They actually really pay taxes at a full rate as opposed to the very large ones. So we think that it is tied to small mid-cap. So that is something to look out for.
So look forward for us. What does the IPO calendar look like this week and the next couple of weeks, and how will that impact markets?
Yes, I think that given the success of the luxury parka maker Canada Goose, that IPO last week, and also the enterprise software company MuleSoft, and then what's happening with Snap, we think that it will be a wake-up call for issuers such as in the consumer brand space, for example. We've been waiting to see SoulCycle, Yeti coolers. We think that if you're an investor, a private investor in those companies, you can't help but notice what happened with Canada Goose. Similarly, with the technology space and enterprise software in particular, we think that that will be the wake-up call for companies like Palantir, Spotify, possibly the cloud storage firm Dropbox. We think some of the larger unicorns are going to start to step up and address the market.
Those companies like Canada Goose, though, and Yeti Coolers and SoulCycle, they're so specific in terms of what they do, and there's not much of a broad reach in terms of whether you're, Canada Goose in terms of just selling coats.
Yes, I think that is a very important point about how specific they are. And the thing is, when it comes to the consumer space, really it's been a very difficult space to be in. The department stores are challenged. The e-commerce is taking over. So I think in terms of the IPO market and what investors are interested in, it's going to be these specific names that have a very high growth profile, which is what Canada Goose had, and we expect to see out of a Yeti Coolers, possibly SoulCycle, maybe Peloton.
Does Uber go public this year?
Really, we think Uber should have gone public a long time ago.
Yeah, what's stopping it?
Yeah.
Issues there, right?
Because they've had a lot.
They didn't have a CFO for a long time, so that was one of the biggest things. They finally got one.
They've got some problems that they need to put to bed before they move ahead with a public offering.
Oh, we'll see about that.
And they've had a lot of capital available to them. So.
That's true, on the private side, so why go public, right? Kathleen, good to see you.
Thank you.
Thank you so much. Kathleen Smith from Renaissance, always great info there. Take a